Some people shouldn't hold stocks because price fluctuations bother them. If you'll do stupid things when your stock drops, don't own one. Hello, everybody. This wisdom helps you create greater wealth. Warren Buffett listed 10 investments that are better than cash right now. Get a free ebook, The Warren Buffett Way. Watch until the end. Real estate values rise despite market fluctuations. There are several ways to build wealth through real estate. A house is a practical investment. Therefore, buying one can be smart. You still live in your house as its value rises. If you buy real estate to rent, you may want to use value-added services to manage your properties. To make real estate an appreciating asset, hold on for years so its value rises. Real estate appreciates, but there are risks. Real estate depreciated and foreclosures increased during the 2008 housing bubble. Real estate investments aren't foolproof, even though the market has recovered. Residential values often exceed inflation, especially in emerging cities. Traditional real estate takes knowledge, money, time, and effort to succeed. That's not a threat. However, you may not be ready to try it yet. REITs are another way to invest in real estate without buying buildings. REITs are pools of money that buy and sell real estate. These income-producing trusts pay dividends from commercial real estate and apartment buildings. REITs allow you to invest in huge commercial properties without the financial risk of physical real estate. REITs corporations trade like public stocks and possess passive income-producing real estate. You invest your desired number of shares at a promising rate. You may earn dividends and sell shares at any time. Waiting usually increases your shares' value and profit. You can buy publicly traded REITs through stockbrokers on major exchanges. The latest investment, non-fungible tokens, resemble baseball cards and bitcoins. Think of an NFT as a digital asset. That is a unique item for sale, given their digital character. NFT takes several forms. Digital artwork, sports highlights, and other elements may be enjoyed. Beeple's Every Days, the first 5,000 days for 69 million, was the best-selling NFT. Investors buy NFT tokenized assets for several reasons. Anyone can buy NFT. One can gain money in NFT by creating and selling it or by trading it. Everyone can invest in tokens. NFT tokenized assets are easier to transfer globally. Thus, NFT liquidity is sufficient. The blockchain verifies NFT ownership. Digitally signing ownership with blockchain technology helps secure an investor's asset. More transparent asset ownership is possible with blockchain technology. Learn about blockchain technology. A tiny investment in tokenized assets can help investors learn about blockchain and diversify their portfolios. You may need Ethereum, a cryptocurrency. Since most 10FD sales occur on Ethereum, possessing Ethereum is typically required to buy an NFT. In the last 5 years, cryptocurrencies have become an asset class. All their Bitcoin data shows they've grown from nothing to roughly $2 trillion in 10 years. It was certainly a fantastic rise. Investor returns on that asset class have risen faster than any other. Should you add cryptocurrency to your portfolio? Bitcoin ownership increased during the COVID-19 market crisis because millennials saw it as a safer asset than gold. The rapid value growth undoubtedly supports a continued interest in holding at least a small cryptocurrency position. How do you invest in cryptocurrencies? With rapid swings and tremendous wealth flooding into Bitcoin, investment is risky. Thus, you should only invest a tiny amount of your portfolio in this new sector. Almost all investments involve risk and loss. Know the hazards before investing in cryptocurrencies. You can mine coins instead of trading them, but it takes money to buy strong machines. Starting a business is time-consuming, difficult, and requires upfront capital, yet even with exceptional execution, it can fail. Starting a business can boost your net worth and become a valuable asset. There are many internet enterprises with low startup costs that can boost your revenue. Successful business outcomes, or later sales, make many wealthy. Naturally, various revenue streams lead to wealth creation. Creating a business might be beneficial. Businesses can be one of the most profitable assets to appreciate due to their profitability. Simple enterprises can make thousands every month. There are many profitable enterprises you can start to build wealth, but it takes time and effort. Taking a low-cost franchise may save you time and energy in planning the startup and marketing strategy. Fortunately, peer-to-peer lending lets you invest in small businesses without doing all the work. P2P lending lets people borrow directly from each other. Websites that offer lending have grown in popularity as an alternate financing technique by eliminating the financial institution. Lending is often called crowd or social lending. Direct lending websites match borrowers with lenders. Each website determines fees, conditions, and transactions. Most sites provide a variety of interest rates based on applicant creditworthiness. P&P lenders to Pascal's lending site must contemplate loan default. Conventional banks do. Blending platforms have higher default rates than traditional financial institutions, according to research. Sometimes above 10%. Any consumer or investor considering a mixing site should evaluate transaction fees. Both lenders and borrowers may pay fees and commissions, but each site generates money differently. Sites may charge loan origination, late, and bounced payment fees like banks. Peer-to-peer lending is riskier than savings accounts or CDs but has higher interest rates. Investors in peer-to-peer lending sites incur most of the risk, which banks and other financial organizations usually assume. Before stocks and bonds, commodities were traded for centuries. The most traded commodities are oil, gold, and base metals. Day traders love futures, which are traded through futures brokerages. This is dangerous stuff. Gold investors can store bars, coins, and jewelry in safety deposit boxes. Only large quantities of aluminum, zinc, and copper are valued. They are best invested in through producer stocks or ETFs. Investors can enter the commodity market in many ways. Commodity-hungry investors can buy physical commodities, commodity company shares, mutual funds, or ETFs. Commodities insulate investors from inflation, which is a major benefit. High inflation drives commodity prices higher due to high demand. It also bets against the US dollar, raising commodity prices as the dollar falls. One thing to remember is that commodities are more volatile than other investments, especially funds that track a single commodity or an economic area. Collectible art may be a good investment if you like paintings. Art investments vary while building wealth. Famous artists' excellent art will undoubtedly improve in value. This applies especially to deceased artists who cannot release new work. Buying famous paintings on your own is risky and expensive for novices. Masterworks or a similar platform may minimize expenses and risk. Masterworks offers fractional ownership of great paintings. You may own part of a Claude Monet picture. Masterworks specialists and art collectors choose paintings with the highest appreciation rates and lowest risk. This is a great art investment opportunity. But don't know how to locate private purchasers, can't afford these expensive works of art, or know how to store them. Masterworks' minimum investment is $1,000. Unlike other appreciating assets, this one is illiquid and can't be sold rapidly. Wine and vintage cars are also appreciated. People adore wine. This asset can also appreciate. Many factors make it difficult to predict which wine will be appreciated. You can invest in wine physically or use Vinovest, a simpler platform. While cars depreciate, you may buy a unique wine portfolio of expertly selected bottles that are physically stored. Classic automobiles might be profitable if you know what to look for and what's popular. Supply, demand, and brand affect prices. Mutual funds use investor money to buy stocks, bonds, and other assets. Mutual funds allow investors to diversify their money across different investments to hedge against losses at a low cost. Mutual funds are an easy way to earn stock market returns without buying and managing individual equities if you're saving for retirement or another long-term objective. Some funds only invest in biotech or dividend-paying firms. You can concentrate on investing in specialties. Mutual funds are provided via management organizations and discount brokerages. Mutual fund minimums range from $500 to hundreds of dollars, although some providers waive them if you set up automatic monthly installments. Mutual funds can be bought on investment websites, trading platforms, or financial institutions like banks. Cash management and high-yield savings accounts offer larger returns than bank savings accounts. Cash management accounts are best for short-term savings or occasional access. Example: emergency or vacation fund. Cash management account transactions are limited to 6 per month. If you're new to saving and investing, keep 3 to 6 months of living expenses in an account like this before adding more or riskier investments. Online banks offer higher rates than branch-based banks due to lower overhead. Cash management accounts usually earn interest. Although not severe, this amount can make it an appreciating asset. Whether you're looking for a high-yield account at a new bank or your existing bank offers one, compare the possibilities. You must consider the interest rate, initial deposit, withdrawal, and cost. If you have a significant savings amount, interest rates and cost differences might add up. Please like and comment if this video inspires you. Subscribe to our channel to see all our videos.